And it is Wednesday, and the Golden Knights won last night. What an exciting game! And they won in Dallas, and it was so interesting because if you didn't see it, I mean, I think maybe the third period, yes, most of the Dallas fans left the stadium. It was amazing to see that. They were very disappointed in their team. I understand. I understand their team didn't win, but man, they left. I mean, they just left. So I'm not sure why they did that, but anyway, little fickle team there. So what's going on today? Excuse me. Excuse me. Well, we have 50 days of inventory, so that isn't bad. Just checking out here, just making sure that you can hear me. Got more problems with. There we go. You do. Okay, good. Anyway, I have many issues with this setup I have, I think because it's getting old. So hopefully I'll be in my new studio the first week of June and will not have technical issues. But here we go. Look at this. I have upped the price to $440. Yes, I have upped the price to $440. If you look here, the price here, $440, based on the let's see if I have a closer picture of it. I may not. Based on the stats that I ran, let's just hide this. And whoops, no, we don't want to do that. It's over here. Hold on, everybody. Yeah, you can see it. It's 440. It's 440 as of now. So I don't, and it went up. It's actually today 442. So I felt comfortable in saying, okay, we're up to 440 in the medium price home, $440,000 for the medium price home in Las Vegas. That's up almost 3.5% from January. Yeah, I know the naysayers out there. I hear the naysayers. Believe me, I do my homework, I do my research, and I listen to so many naysayers. I have one fella, he's actually from Vegas. He's probably done 10 real estate deals in his life, unless he's just selling new homes, because I just have access to the MLS stats. Anyway, he is talking like real estate is not a good investment. And he has 30,000 followers now. There's ways to get 30,000 followers without them being organic. So I don't know if he did that. I have no idea. But I know that when I read the comments, there's some people that love him because they think he's telling them the truth. There's other people that are trying to politely suggest that he might not be correct, because our market is a different market. And I think you have to be in this business a long time and see over time how our market is always different, and it's not going to change. 8 people an hour move here. Where do you have that? And yes, the interest rates are high, but people are moving here. The other thing is that I think people forget, and I mentioned to someone in the fitness center this morning. We were having a nice conversation about, how great the market is and will continue to be. We're selling 93 homes a day. You can't beat that. And you buy real estate for the long term. You buy, hold, and die, as they say. So you don't want to buy you're not buying a stock. You're not a day trader, for heaven's sakes. You're buying real estate. And maybe the interest rate is a little high. But one of the things we were mentioning is, since the sellers have experienced a pretty good increase in their value in the past 3, 4, 5 years, that they do have some equity there that they could hand over to the buyer to buy down the interest rate. And I think that's what's happening. And then that seller is saying, okay, when I go to buy, I'm going to ask the seller, since now I'm the buyer, to do the same thing. I think that's happening here. And I think, we'll hear it at some point. People will come up with that we already know. Because we're in the business, we're in the heat of the business. We were selling 128 homes per day last May, year to date. I mean, yes, it's down 25%, almost 30%, perhaps 25, 26%. But that's not the end of the world for us. The prices, it's a good market. And I think that we're going to continue to see it go up. I put a little arrow up there because I'm going to watch it just continue to perhaps go up. Now, there's all this talk, and people get into the thrill of the kill media where the debt ceiling and this and that and all these different factors. But at the end of the day, Zillow is saying, hey, the prices are going to go up. The market's going to continue to be strong. And then you have Fannie Mae saying, well, they think it's just going to be stagnant. And then you have Dr. Young saying, well, it's going to maintain itself. So you have all these experts, and basically nobody has the crystal ball. Nobody knows what's really going to happen. All I want you to see is the trends as they occur on almost a daily basis. Monday, Wednesday, Fridays, we can look at the trends, and we see, 27% of the market is the $440,000 home and under. And we see that 16% is the $1 million plus home. When these things start to change, then we know the market is shifting. And we have 50 days of inventory. Not bad, not bad. Really, 50 days of inventory isn't that bad. I see that perhaps maybe going up in the fall. I don't see it going up anytime soon. But again, we don't have a crystal ball, but we can look at the actual numbers. And the fact that May has come on so strong is very reassuring to me, and hopefully to you as well. The investors are out there still buying about 22 homes a day, and they're generally cash buyers. And I believe, speaking of cash buyers, I believe the stat that NAR says 43% of the real estate is mortgage free. So these people that are saying that, the sky is going to fall, I don't think that they realize that back in 2008, it was a totally different time. There was no equity. There was no sweat equity. People were buying homes if they could fog a mirror, we used to say, and the prices kept going up because people would come in here and just thinking that, they found the pot of gold. And then the market tumbled, and we were the number one foreclosure city in the country. So of course our prices were rock bottom, and of course but then they went up. And so you do see that the market went up, and you do see that it adjusted a little bit. It's always going to go up and down a little bit. The 2008 phenomena, we don't think will ever happen again unless the mortgage companies go crazy and start this throwing money out the window to anybody who can catch it. So we shall see, but we don't predict that. Of course, we don't predict that. And let's see here. I wanted to show you what some of these, this is Phelan Taylor, and I think he is with the mortgage, this is out of Washington, D.C., and this was today, and he is saying mortgage applications decreased 4.6% from 1 week earlier. And that's according to, he's Mortgage Bankers Association weekly mortgage application survey for the week ending May 19th. The market composite index, a measure of mortgage loan applications volume, decreased 4.6% on a seasonally adjusted basis from 1 week earlier. So he's saying the unadjusted purchase index decreased 5% compared with the previous week and was 30% lower than the same time 1 year ago. Well, that's not necessarily our market with that 5%, but I think we've been on the upswing pretty much this whole month. Mortgage applications declined 5% last week. The 30-year fixed rate increased to 6.96%, the highest level since March. And that's remarkable. Refinance activity remains limited, of course, because most people are not going to refinance right now. And then let me see if I can get this on the screen here. The housing market received positive data on new residential construction, which is seen as a key solution to the lack of housing inventory. We have a lack of inventory. We know that. And so the new homes that are coming on the market are positive. And in the country, between the resale price and the new home price, they're getting closer together, which is a good thing. That means that gives people choices. And many of the builders are offering to buy down the interest rate and give great incentives. So hopefully they'll continue to pay us, right? And we've seen that act before. So that has been what's going on in our market, and we shall wrap that part of the show up. And just want to let you know that we are having a class. Today it's ethics, and the ethics class, it's 2:00. So if you really need an ethics class, because this is one that we had to reschedule. I don't think I have the ad for that. No, this is one that we had to reschedule, and it's a Show Me the Money. Great class. If you need ethics, you can sign up anytime. The class is 2 to 5, so you can sign up anytime before 1:30 and still get in, or just walk in. You can always walk in. And then tomorrow we are having our risk reduction class, and that is a great class for understanding what you can do to protect yourself. And this is a moving target. You know, the amount of fraud because of the internet and because of all the hackers out there getting into people's personal data, it's increasing. And so as it increases, we need to increase the things that we protect. So we have a pretty good class to show you how to do it. If you're new to the digital world, Kane spends the first part of the class going over some of the basics, and then gets pretty deep into what the hackers are doing. So it's really a fun class. And you can sign up at be.vegas. Anytime tomorrow before 9:30 would be fine. Crack that digital code. And Kane does an excellent job of teaching that class. He and Jimmy teach it sometimes together as well, but I think tomorrow it's just Kane. And so to wrap up today, I want to do a little bit about social media. I have a 11 o'clock appointment, so I can't delve as deeply into ChatGPT as I want to. And before we see Gary, I want you to know that we're offering this book, and Kane is working very hard on the email so that you can email and we can just send it to your email versus having to go on Facebook and download it. And this is AI tools for real estate agents. And there's nothing going to happen with artificial intelligence. It may take a breather. However, there are some really fascinating tools out there. There's 5 different sites that I'm going to put in the, I may save it for Friday, and I'll give you the 5 different programs and what they do. And then in addition to this, AI tools for you. So that's what's coming Friday. Today, we're going to listen to Gary tell us again and again and again that we have got to get on social media. So let's listen to him, and then I'll.
Brand enough. I know what your pain points are, but we must have this conversation together that the scale of volume of creative we need, and we must win on relevance, not just on our subjective opinions of brand. And we must do it at scale. So what I would do today is I would produce as much content as humanly possible on TikTok, Facebook, Instagram, YouTube, Snapchat, Pinterest, at scale, at the lowest cost possible, which is not at the expense of the quality of the content. And I would do that. And then when I would get the signals, quant and qual signals, I would then amplify true consumer insights into more meaningful. And that is the model that I believe in. I believe in above the line activities. I just think they're overpriced, and I think we guess. And I'd prefer to use social media as a proxy. And I don't believe posting on social media is spray and pray. I don't believe it's test and learn. I believe it's marketing. Why is a social media picture any different than a print ad? As a matter of fact, a social media picture done properly will be consumed by more people than a print ad in Vogue. But in social, it's like this lightweight thing, and it's maybe test and learn. But in print, because it's yesterday, we put yesterday on a pedestal. We'd rather pay $4 million for a celebrity than $400,000 for a KOL, and the impact's not even close in 2023. We'd rather run a print ad that takes us 4 months to decide, that's on brand with our brand positioning, than post a proper photo on Instagram. We don't treat them the same, yet the latter is actually more impactful in 2023. And so I view marketing and social as you do marketing for the sake of doing better marketing. So I would make a pot commitment to social media organic creative. And once the signals played out, I would then use media to amplify, to create brand building and sales. And that's what I would do today. And then when I would do above the line work, I wouldn't do commercials. I would do pre-roll YouTube. I would do connective TV. I would do the new streaming service options because they are more built on social where I can target. And again, I would try to mitigate my cost of the creative. I came from Silicon Valley world where the biggest companies in the world, Facebook, YouTube, were making videos for their company, commercials on the internet, and they were spending tens of thousands of dollars to make it. Then I came into Madison Avenue, and smaller companies like yours, compared to those companies, were spending millions of dollars to make a video. And it was a very big culture shock for me. I promise you, a video that's 30 seconds long should not cost $500,000. I promise. I promise. But the reason we all laugh is that's the rules of the industry. And the industry's done an incredible job justifying it. And so we must talk about this. And everything I just said enhances luxury, doesn't decline it, but luxury is super struggling with what I'm saying. There's this subconscious in their stomach reaction to this modern that feels like it's diminishing the luxury. When you look at the data, premium watch industry has exploded because of social. Premium premium art, all exploding. Yet in CPG, consumer luxury, there's this bias-y that the modern communication channel somehow diminishes the brand, which is really detrimental because this is no longer, and everyone here knows this is not 20-year-olds on social anymore. The amount of 40 to 60-year-olds that are completely living in these platforms and all their consideration is coming from these channels is profound, and we must recognize that. Brand enough. I know what your pain points are.
So let me get back up here. Thank you. Here's the notes. Here's what you need to take away from what Gary is saying. Right now, a lot of the luxury people are holding back on social media. They would rather spend $400,000 on a 30-second commercial, right? They used to spend $1 million. But the point is, it's rented ground. We know that. Social media is rented ground. We have an opportunity to be in front of people right now. And he's telling you the stats of how the 40 to 60-year-olds are more on social media. They live on it, as well as, the younger people do. And so we have a chance right now. And you know what happens? And we've seen it so often, like with the great year we had 2 years ago in real estate. You think it's going to be there forever, and then it's gone. It's poof, it's gone. It's gone. And so you've got to embrace the time you are today. You have that time. You need to embrace it and put out content. Start 30-second videos. How hard can that be? All the tools that are out there to help you. And this is not the Gary Vee when he starts talking about Facebook Reels. He says that's where you should be concentrating. Instagram right now is having some, what do they call it? Not algorithmic issues, but organic reach issues. And I think it's because all the influencers are there. If I had to step back and look at it, I never did embrace Instagram like everybody else, only because I decided to go deep on YouTube instead of Instagram, just because I'm a different animal than you all are. I'm not selling real estate. I'm helping you sell real estate. So I'm more in the educational line. So Instagram was more for, like we said, influencers and people that are selling real estate, where you can show the beautiful homes and all those types of things. So I choose to go to YouTube and Facebook. And I've maintained those. Now I dabble with, I do repurpose a lot of my content onto LinkedIn. I didn't get deep into TikTok. Went on it in the beginning, and I realized this could take a lot of my time. And I need to concentrate, like Glenda Baker, my friend, she takes like her Sundays, and she just constantly does videos and retakes and those short-term videos. And she's done tremendous on it. Okay, but again, I'm not after that market. Okay, my videos are not for that purpose. But what Gary's saying is you have to do content at scale. Years ago, we did our Agent Formula website with thousands of pages of content. We knew then the consumer was looking for content. They're still looking for content. It's just a different platform now that they can find it, which means that, yes, you want them to go to your website, but you can use the pages on your website, like the green screen feature that all the platforms have now, and put a page of your website behind and say, if you want to find out about all the communities in Las Vegas, click here. And they click there and they go right to your website and they see the communities, and you've captured someone, you've engaged with them. And hopefully you all will start doing that, giving valuable information to people and then telling them where they can find more. Learn more. It's such a great call to action. And then again, what I've got to run, but analytics, then you have to see over time. Now things have to percolate, right? You don't want weak coffee. This stuff has to percolate. It has to take time for you to realize who's looking at me when I do this, who's not looking at me when I do that. So you have to understand how to read your analytics and then do that. I could go on, and we will go on. We've got lots of time. Time is our most precious commodity, and we try to utilize it as best we can. I am going to go. I have a class today with Jimmy and a meeting before the class. So I'm a busy person. I've worked out today. I've run 3 miles. I've created my show. I've done my stats, and now I'm going to go do that. And you all need to be that busy too. Don't have any downtime. Don't be sitting around twiddling your thumbs, wondering what you're going to do next. Execute. It's important. And done is better than perfect. Remember that. That's the deal for the day, right? Done is better than perfect. I love you all. Have a great Wednesday. I will see you Friday, and we are going to talk about ChatGPT and all the AI tools, and some amazing websites that you can go and do different things with. Amazing stuff. I will talk to you.